We've got data released over the European session. What's caught your attention?
Okay, well, I think that once again, probably one of the biggest headlines came just prior to the European session, and that was the HSBC China flash PMI, the early read of the Purchasing Managers Index in China, and it was disappointing. I've got a read of 49.2. That's below forecast at 49.6. What's key when people are looking at PMI data is to realise it's really a measure of economic activity. Anything below 50 suggests a contraction.
Yep.
Above 50 suggests economic expansion. And there we are. It's lower below 50 in China. There is always variance between the preliminary read and the official data, which comes out later. But a lot of people like to focus on this. Having said that, people sort of took it in their stride today. I guess what the recent actions of the Bank of China suggest that, or People's Bank of China suggests that, you know, the authorities in Beijing want to be accommodative. But if we then look into what happened in the European session proper, we had PMI data from Germany. And I just picked out the manufacturing figure here. That was, again, a miss, a read of 51.9, so still expanding, but well below the 53 reading that was forecast. And if we move across to the Eurozone as a whole, then the manufacturing PMI there was also lower. Again, the read of 51.9.
But above 50.
Above 50, but below the forecast of 52.6. And the services PMI, the other big measure there, again, lower, 53.7 versus a forecasted 54.5. So we've got used to some good positive data from the Eurozone in recent weeks, and this is a bit of a setback, and that's been reflected in the currency moves today. And then as far as jolly old Blighty is concerned, retail sales for March, again, something of a disappointment.
Negative number.
Yeah, people were looking for something positive, and we've got month-on-month fall of 0.5%.
What interest rate hike?
Yeah, exactly. I think that's the clue there.
So let's move on to the FTSE 100, movers and shakers. What's on the list this morning?
Experian, credit referencing agency here in the UK, they're up just over 1% this morning after their US peer Equifax reported a really decent beat in numbers last night, with sales up by 5.2% in Q1, so that's a good read across for Experian. And then United Utilities, bit of a risk-off day for European equities, and so defensive stocks are back in favour today, and they're up 2% on the back of that. And then fallers, well, Legal & General, Old Mutual, Glencore and Barratt Development, all down significantly.
And dividends.
But they're ex-dividend. Thursday's the new ex-dividend day. So though those stocks are easier, the dividends are already in the price.
And stripped out of price.
Back,
understood. Yeah. Okay, so let's talk about M&A. What are the rumours and movers this morning? Anything of interest?
No real M&A deals per se, but I picked this story out because I think it's probably one that will have... probably most UK and European viewers might not have picked up on, and that's how strongly uranium stocks performed in the US last night. If you can see half a dozen names here, all of them sharply better, and the reason is quite straightforward. A Japanese court has ruled to allow the Sendai nuclear plant in Japan to reopen. As you might recall, after the tsunami and the Fukushima disaster, all Japanese nuclear plants were turned off. But now some of these plants are trying to come back online. This is seen as a bit of a breakthrough decision in one of the highest courts in Japan, and it could be the first of many Japanese plants to seek permission to come back online. Right. Uranium prices themselves are up 35% since the summer last year, so it's quite interesting, given that you'd have thought demand would have fallen away. Why this is also interesting, of course, is if Japan starts to produce much more nuclear energy again, become less reliant on energy imports, particularly LNG and oil from abroad, that might have a read-through into underlying oil and gas prices.
Excellent. Okay, so in terms of the US data points to keep an eye on, there's not very much on this slide.
No, the figures today, weekly jobless claims that comes out every week, as we know.
Every Thursday.
Yeah, that's one you can take or leave it to. Probably the key is the US April manufacturing PMI. I'd watch that one closely. And new home sales for March. Forecast there is 513k versus the 539,000 sales in February. So we're really looking there for a month-on-month fall of just under 5.5%. Anything better than that would be a positive. The PMI, obviously, we'll be looking for a positive number north of 50.
Right. Okay, and the final slide today, the pre-market movers and levels.
Right, well, things that reported after the close last night, that were moving. Qualcomm, chip manufacturer, particularly involved in the mobile space, but they guided lower for the coming year, so they've been sold off by about 1.6%. Going the other way, eBay, had an emphatic beat across the board, and they're seen as being up to 6% better on the day. And in terms of levels to watch,
and in terms of levels, these are sort of chart points, an old high, an old low.
Simple support and resistance levels to watch. So in the S&P, 2089 is a level to watch on the downside, 2110, 2115 to the upside. For the Dow, look at 1788. Or 17,888, I should say, at 18,110 on the upside. Euro dollar, the focus is the downside again after those disappointing numbers. 106.59 and 106.20 to watch there. Aussie, continue to watch that on the upside against the dollar at 78.
Interest rate play, we've talked about that this week, haven't we?
Dollar yen, also an upside with the yen weakness back in focus, 120.10 and 120.30. And finally, cable on the downside, 149.75 and 148.50 are the levels to watch there.
Understood. Okay, that completes day 4 of the Wall Street crossover show.
Thanks very much.
Darren Sinden, market commentator, Admiral Markets. A pleasure. Okay, that wraps us up. We'll be back tomorrow. Have a good day. Thank you.